You have the system, and you have the exchange. Now let's talk charts. The high volatility and 24/7 nature of crypto creates specific high-probability patterns that you won't see in traditional stocks. Today, we master the Wick Recovery and the aggressive crypto Pennant Breakout. These patterns signal massive moves, but you must apply your 1% risk rule and use tight stop losses. Volatility cuts both ways. This is for entertainment and education only. Pattern 1, the Wick Recovery, the false breakdown. This is a classic trap for impatient bears. A wick recovery occurs when a price makes a deep, fast push below a crucial support level, creating a very long lower wick, only to immediately snap back and close above that support. That long wick means the stop losses below support were triggered, but buyers aggressively stepped in and rejected the lower price. It's a massive show of strength. The entry. You enter only after the next candlestick closes above the broken support line. Your stop loss goes tightly below the wick's lowest. Pattern 2, the aggressive pennant flag breakout. In trending crypto markets, continuation patterns don't spend weeks consolidating. They compress quickly and then explode. The pennant is a small, short-term triangle formed after a strong impulse move, the flagpole. We use the 50-period EMA for dynamic support during this consolidation. The confirmation. Unlike slower markets, we look for a breakout candle that closes strongly outside the pennant, ideally with a volume spike. This often happens violently. The trade. Entry is on the break. The stop loss is placed just inside the widest part of the pennant. The measured target is the length of the original flagpole projected from the breakout point. Adaptation 1. Using the funding rate. If you are shorting with perpetual futures, be aware of a positive funding rate. High positive rates can sometimes signal exhaustion in a long-term uptrend because bulls are aggressively paying shorts. Adaptation 2. Watch for exchange listings. Crypto markets are highly sensitive to news. A sudden, massive price pump is often triggered by an announcement that a major exchange is listing the asset. Treat these as momentum trades, but be prepared for extreme volatility afterward. The four-way confirmation in crypto. Remember to apply the checklist: trend MA, setup pattern, momentum RSI MACD, and trigger breakout. The volatility means you must rely on all four, not just one. These aggressive patterns require discipline, but they offer some of the best risk-to-reward ratios in the market. What is the highest RR trade you've ever taken using one of these fast crypto patterns? Let us know in the comments. Subscribe as we dive into the most advanced strategy, high-probability scalping.